Exercise 1-22. We're going to continue to use the accounting equation. This one's going to be a little bit more challenging. So Star Nursery started 2016 with total assets of $24,000 and total liabilities of $5,000. At the end of the year, Star Nursery's total assets were $18,000 and total liabilities were $1,000. Notice they're not giving us the equity amounts. So they give us two of the three variables in the accounting equation. So the first question, we've got two requirements here. Did the owner's equity of the company increase or decrease? So what we have to do is we have to calculate owner's equity for the beginning of the year and for the end of the year. So to do this, we have to know, well, what is the accounting equation? Do you remember the accounting equation? It's assets equals liabilities plus owner's equity. So all we're going to do now is we're going to plug in two of the three variables and calculate the last one. So our total assets were $24,000. Our total liabilities were $5,000. So what was equity? So to calculate equity, $24,000 minus $5,000 gives us $19,000. So at the beginning of the year, we had $19,000 of equity. So in other words, of the $24,000 of assets, the owner owned $19,000 of those assets, and the bank owned $5,000, also known as debt. So now we have to calculate the equity at the end of the year to see how much it has changed. So here's my calculation again for the beginning of the year, equity. Now let's do at the end of the year. So Star Nursery's total assets stood at $18,000. So we're plugging $18,000 for assets. Total liabilities were $1,000. So how much was equity? Well, obviously $1,000 plus $17,000 equals $18,000. So owner's equity at the end of the year was $17,000. So getting back to our question here, it says, did the owner's equity of Star Nursery increase or decrease during 2016, and by how much? So beginning of the year, it was $19,000. End of the year, it was $17,000. So it decreased by $2,000. Decreased by $2,000. Now remember, the comma is optional. I usually do not put the comma in there because it's just one more keystroke that could give me a chance to make an error. Excellent. All right. Now it says, requirement 2, identify the 4 possible reasons that owner's equity can change. So now this is critical too that you understand this. What are the 4 things that make equity go up or go down? Do you remember from our PowerPoint slide from a previous video? So here's equity. So there's 2 things that make equity go up. Owner contributions, that's when the owner contributes money to the business, usually just by putting cash in the checking account. Or revenues. Now remember, revenues is whenever the company sells something like a service or a product. Those are the 2 things that increase equity. All right, now there's 2 things that decrease equity. Owner's withdrawals. So a withdrawal is when the owner takes money out of the business and spends on personal use. So the owner is not spending it on the business. Owner is spending the money on personal use, like paying his or her mortgage or buying groceries. Now, an expense is the cost of doing your business. It's the cost of selling goods or services. So if you're babysitting, it's the cost of whatever your babysitting expenses are, like the electricity or the electricity expense, the rent expense, etc. So these 2 things, owner withdrawals and expenses, decrease equity. Now, one thing about revenue is if you have revenue, you're going to have expense. So these 2 are combined to calculate profit or loss, also known as net income. So if revenues are greater than expenses, then we have net income and equity increases. If expenses are greater than revenues, then we have a net loss and equity decreases. So back to our problem, it says owner's equity can increase through, now how does owner's equity increase? Through owner contributions or revenues, but only if revenues exceed expenses. So here we've got owner contributions, and then notice here they did not allow us to choose revenues. The reason why is because what really increases equity is if revenues are greater than expenses. So what do we call it when revenues are greater than expenses? That's profit, also known as net income. So net income also increases equity. So how can owner's equity decrease? Going back to our little diagram, it increases by owner withdrawals and it decreases from expenses. But remember, expenses always come with revenues, hopefully. Hopefully the company has revenues. And notice they do not allow us to choose expenses. So what lowers equity is if expenses are greater than revenues. So what do we call it when expenses are greater than revenues? That's a net loss or a loss. So there you have it. The 4 things that affect equity. So make sure you understand these 4 things that affect equity. 2 increases and 2 things that make it decrease. Okay, so don't forget to do the next question on your own, which is the same version as this one, just with random numbers.